Welcome back. You're still tuned into Trading Hour. We are attempting a little bit of a move higher once again, so around 25 points higher on the Nifty. Now we have moved a little bit higher from that, the flat line where we started the show. It is the Nifty Bank, which is still under pressure right now, seeing cuts of around 100 points. But let's talk about the auto sales now, because that is going to be the big cue that we have to watch out for. All of the sales figures are expected tomorrow, the 1st of December. So, Mangalam, run us through everything that we should expect this time.
Well, a bunch of things. November, remember, was the post-festive season. So, while sales are likely to be strong on the whole, the entry-level segment will still persist with some sort of weakness, and that is what is expected. The personal vehicle, passenger vehicle demand is largely unaffected by at the premium and the high-end segment, because those who want to buy cars out there have continuously gone ahead and bought those cars, and the waiting periods for SUVs have reduced, as well as chip shortage problems have eased too. So those are a bunch of things that will support demand this time around. Slight moderation, however, post-monsoon is seen in trucks as well as tractor sales, and two-wheeler retail sales, while they're still reasonable, wholesale has been affected by post-festive destocking. So all the showrooms, etc., have been destocking, and that will reflect in weaker wholesale sales that the companies will report. Urban, however, continues to be better than rural, and this is a trend that I'll be monitoring, not from an auto standpoint, but also the entire consumption basket standpoint too. So what does it mean in terms of overall numbers? The CNBC-TV18 poll suggests that Maruti will see total sales growth of almost 21%, 1.68 lakh units. A lot of this would be led by a lot of the new launches that the company made as well. For Tata Motors, we're likely to see a 19% jump, around 74,000 units of sales out there as well. For Ashok Leyland as well, a 30% jump on a feeble base, 13,600 units is what the company would sell. For M&M, the big kicker will come in from their passenger vehicles. A lot of their new launches have done extremely well out there, so that will show a 44% growth year on year, whereas tractor sales moderate, so a growth of just 1% year on year. And now quickly onto the two-wheelers then. Bajaj Auto total sales seen down 10%, and it would be a mix of both domestic sales as well as exports being lower. Eicher Motors would see Royal Enfield sales higher by about 43%, whereas TVS Motors will see total sales up by about 12%. For Hero MotoCorp, total sales seen higher by about 12% too. So apart from Bajaj Auto, most of the others are expected to show strong growth. Bajaj Auto is the only one which is expected to decline by 10% year on year.
Okay, thank you very much for that concise summary. To take the discussion forward, we are joined by Aniket Mhatre of HDFC Securities. Aniket, just to take the point that Mangalam made, on the passenger vehicle side, there is weakness at the entry level, and he also indicated the channel check suggests that the waiting period for SUVs has come down. Is this something that you are picking up as well? And what does it mean then for passenger vehicles? Nomura says it perhaps could result in OEMs bringing down their production or offering discounts. Is that the correct way to approach it?
Sure. Good morning, Rima. Thank you guys for having me on your show. So on the passenger vehicle side, clearly demand continues to be strong. You would have seen order backlogs continue to remain the record high. Yes, with production going up, the waiting period is certainly coming off, but that does not mean that production will come down for OEMs, at least for the foreseeable future, given that they will have to first exhaust their waiting period, and then you will see productions come off. So over the next few months, we will see production continue to inch up for most of the OEMs as they continue to delve into their order backlog. So that's on the passenger vehicle. I think demand will continue to remain robust. Yes, we will have to continue to monitor the waiting period, which is coming off clearly because production is going up with chip shortage issues now behind us.
All right. Hi, Aniket. Good morning and thanks for joining us. This is Pavitra. You know, on the two-wheeler sales, the festive season is behind us. So how do you look at that panning out now? What is the kind of volumes that you expect? And in that context, then how would you look at the different players within the two-wheeler space?
Yeah, so as far as two-wheelers are concerned, clearly, even as Mangalam pointed out rightly, the premium segment continues to outperform related to the entry segment at the moment. For Royal Enfield, for instance, we are looking at a 45% volume growth in November. For TVS also, on the back of the launch of Raider and Ronin and Apache doing very well, we are expecting a 16% volume growth, both of them likely to outperform the peers. As far as entry level is concerned, Hero, we expect a 5% 5% volume growth, and Bajaj we are expecting 5% decline because of a weak domestic outlook. If you look at overall going forward, right, there are some green shoots as far as rural indicators are concerned, with reservoir levels being very strong, and we expect Rabi sowing to be pretty healthy incrementally, right? So we think rural demand can come back positively from 4Q onwards, which would help improve two-wheeler demand in Q4. So even entry-level segment could improve from here on over a very low base of last few years in our.
Right. Aniket, you know, as far as the investment in auto stocks is concerned, I'd just like to know that December being a relatively lean period for car sales, etc., the stocks have moved already. How much is in the price? What are the triggers that you're looking at the next year? And to that extent, what is the stock that really stands out for you?
Sure. So as far as the auto sector is concerned, in auto OEMs, our top pick remains TVS Motors, given that it continues to gain market share in major categories. If you look at scooters, they have gained almost 500 basis points market share this fiscal to almost 24% now. Motorcycle market share for TVS has remained stable in the first half, but that's largely got to do with the production constraints that the company suffered in 1Q. Going forward, with the Raider ramping up and the Ronin also seeing decent momentum, I think TVS motorcycle market share should also inch up from here on. Add to that, even in electric vehicle space, they are doing the right numbers. I think they are talking about ramping up to 10,000 per month by December and going on to 20,000 per month by March. So they are ticking all the boxes for us, and hence TVS remains our top pick here. The second stock that we like in the OEM space is Mahindra and Mahindra. Here again, after having seen substantial market share loss over the last few years, I think M&M has clearly got its UV strategy right, and they are launching one blockbuster product after the other for the last few quarters. We are seeing a record high order backlog for M&M to the extent that some of its models are even on waiting of 6 to 12 months right now, which is very encouraging. Even the tractor cycle seems to be stable. We won't call it a robust cycle, but it's stable. We are expecting a single-digit volume growth this year and the next as well. So TVS and M&M are our top picks in auto OEMs at this moment.
What do you classify as luxury? Because we understand luxury is doing very well. So what is the classification? How much higher does the price have to be for it to be considered luxury?
So when you say luxury, typically in passenger vehicle, we look at Audis or BMWs of the world clearly. Up to that, below that, everything is, utility vehicles are classified below that, but luxury means largely Audis or BMW, which sell very less volumes in India. But yes, they are certainly doing very well at the moment.
And any channel checks on the luxury demand? Is it intact? Is it picking up? What is the waiting period like and discounting?
So to be honest, given that luxury segment, none of the OEMs are listed. We do not do channel checks on luxury segment per se, but at least from whatever we hear, we understand that the luxury demand continues to hold extremely strong. They are growing in double digit, and the demand continues to be pretty robust in the luxury category at the moment. That segment has been the least impacted post-COVID, and hence it's doing very well at the moment.
All right, Aniket, we got that. Thank you very much for joining us and taking us through all of the expectations from what the auto sales could look like, and also some of, how you are viewing some of the bigger players.